Hey, what's up guys? It's Alex from daytrading.com. I hope you all are having a great start to the weekend, and I hope you had a great week this past week trading the markets. This video, I'm going to talk about just the massive ramp up we've had in the stock market and why I actually think we're going to have a pullback, and the bet that I just made 20 minutes before the market closed on Friday. So please go ahead and give us a like and subscribe to our YouTube channel because we're working on providing a lot of valuable content and we're just getting started with it. So let's do a little recap. On a year-to-date basis, here you can see the S&P 500 on my charts. Here's a 1-year chart, and this is Friday's performance of the S&P 500. So in the past year, I mean, you can see obviously from the pandemic lows to where we are today, who would have ever thought that we would have literally done a V-shaped recovery and just blasted off, last year's highs. And yesterday we closed into record territory and all-time highs on the S&P 500. However, while this is really, really good for everyone who's invested in the markets, I actually think we are due for a pullback. I'm not saying that the market's going to crash. I'm just saying that we are running way too hot, and these are the reasons why I believe we're gonna see a pullback in the upcoming days and weeks. So the first thing that I like to look at is the relative strength index. You can see here on the bottom of my chart where if you can follow my cursor, this is the relative strength index. I love this because it tells you if we are overbought or oversold. Anything above 70 is overbought territory, anything below 30 is oversold territory. So check this out. In the past year, there are two clear instances where we rallied above 70 on the relative strength index, and we had, preceding after that, we had market pullbacks. So check this out. June of last year, we rallied really strong, and the relative strength index came above 70, and look at the chart here. This massive rally, and look at that gap up we had. Then we had that nice pullback. The high of 324 and change came down to a low of 297 on that pullback. And you can see that the relative strength index popped to a high of 75 and came down within 2 weeks, came down back to 45 on the low, but prior to the bounce, right? So that right there catches my attention. And then check this out a couple months afterwards, right? That happened in June. Then look at what happened in September. The relative strength index rose above 70 again, specifically on August 24th, and came straight down on November 2nd. There you can look at the chart on the S&P 500. Right, this was a high of 358.58 or change, came straight down where? To the what now became the support zone. What was overhead resistance back here in June, then became a support zone when we broke out of it in July. Then when the market rallied to a high of 358 on the S&P 500, it sold off, tested that high in June, and we double bottomed on that support zone and then just skyrocketed, right? So what I notice here is that you've got two instances in the past year where the relative strength index broke out of 70 and it came with a market pullback that was just a healthy correction. The bull market is still intact, but stocks don't just go up forever, right? There has to be some pullback, some consolidation, and there you see two instances where that occurred. Instance number one here, and then instance number two before we had the breakout of that overhead resistance, right? So let me just go ahead and delete those. So now we are in a very similar situation. Check this out over here. If I can just zoom in a little bit, follow my cursor. RSI closed on Friday at 71.81. We just poked above the 70 mark, and we're getting pretty extended. I also use the Bollinger Bands, which helps just helps me see if the market is getting too extended to the upside or to the downside. And the S&P 500 is trading right at the upper end of that upper Bollinger Band. The RSI is at 71.81, and to me, these are just red flags. I really do think that based on these two technical indicators, we are due for a pullback. I would love to see a pullback right to about 397. That's where the 20-day moving average on the S&P 500 is currently at. And also, that is the overhead resistance zone that we broke out of on April 1st. I would love for us to test it to see if it acts as a nice support zone where we can bounce back from it. So I'm predicting, and I'm actually looking for a pullback from 411 to about 397 zone. So anywhere between 397, 399, maybe even the 400 psychological number, I'm looking for a pullback to that zone because we are getting a little bit too hot. And here's another thing I want you to pay attention to. So let me actually delete these marks so that way we can just focus on what I'm about to bring up. Down here on the volume, you can see that the volume was really, really low. As a matter of fact, let me see, compared to, let's mark it up here. This volume is the lowest daily volume where the market ripped on Friday since, I want to say, let's see here, since about, 2 months. So you have the market ripping to the upside with low volume for probably one of the lowest volumes in the past 2 months, daily volumes. RSI broke out of that 70 overbought zone, and the market is trading above the upper Bollinger Band when it comes to the daily chart on the S&P 500. Those things are just adding up to me believing that there is going to be a pullback in place. Let's also take a look at another indicator, the VIX. The VIX, as we all know, let's see, prior to the pandemic right here, you can see here February 24th is when the VIX really just broke out. Let me pull up the weekly here. It's a little easier to see. The VIX wasn't really, it was holding that $20 mark, right, the entire time. But now look at this. We've broken below the $20 mark, and I think we closed 1669, the lowest since the pandemic started. A lot of analysts are saying that there's a lot of complacency that's coming into the market. And look at the RSI on the VIX. It's getting oversold. The RSI is at 3874. Let's put a low on the RSI here. So typically, in the past 2 years, when the RSI touched this 35 range, it bounced, it skyrocketed. So that's something to keep an eye on too, because a lot of traders are beginning to hedge their portfolios by buying calls on the VIX and or even getting puts on the S&P 500. So with that being said, oh, and also let me not forget, on Friday we got the inflation, extreme inflation concerns. Specifically, we got the, let me tell you here, I want to quote the exact numbers on the PPI. So we got 1% report indicated when it was expected 50 basis points. Not only that, on a year-over-year basis, the index for final demand was up 4.2%, highest since 12 months ending September of 2011. So there are some serious inflation concerns, and this is going to put a lot of pressure on the Federal Reserve and the interest rates and 10-year yield, especially the 10-year yield. That's something that everyone's watching very closely. What a lot of analysts are saying that the closer it creeps up to 2%, it's going to put a lot of pressure on equities. So you've got a lot of things that are kind of in play right now. You've got an overbought S&P 500, the VIX at oversold territory, and then you've got inflation concerns that are legitimate and are really, really picking up when it comes to the rhetoric. And that to me is just a red flag. And so with all of that being said, this is what I did Friday, 20 minutes before the market closed. So this is, if you focus on where my cursor is at, this is the S&P 500 on Friday. You can see here, 45 minutes before the market closed, the S&P 500 just went into like this crazy algorithmic buy, type of machine mode. And you can see that it just ripped to the upside. I saw that rip and I was kind of waiting for the first consolidation before I bet money that the S&P 500 was going to pull back by April 30th. So right here at this zone at around 340, this is what I did. And I took a screenshot of it because I wanted to share with you guys. So I went ahead and I took a screenshot of the order, right, that I did. So I went ahead and bought SPY 411 puts that expire on April 30th. And I started off with a small size. I started off with buying 10 contracts, which comes out to about a almost $5,200 bet. So I'm betting $5,200 that the market is going to pull back. Now, this is a starter position for me. If the market continues to rip to the upside and we continue to see that overbought territory, I'm going to add into that position. I can possibly go double, maybe even triple my position. I wanted to take a starter, especially the way that the S&P 500 closed on Friday. So with that being said, guys, I do think that we are due for a pullback. My target on the pullback for the S&P 500 is the psychological number of 400. I think it could test 397, 398. And if I get that correct, then my puts on the S&P 500 will pay me out pretty nicely. So I will keep you guys updated on how my trade goes, but I just wanted to take a moment to share with you guys the technical analysis that I see and the sentiment and everything, all this information that we are all trying to put together, right, to manage our money, to manage our portfolios so that we protect our hard-earned money. But also, from a trade perspective, I think the risk reward on this type of trade, betting that the S&P 500 is going to drop, I think it's a pretty good one. So let me just share my screen again. This is exactly the trade that I took. You can see here at 340 on Friday, I bought 10 contracts betting that the S&P 500 will drop. And specifically, I bought SPY 411 puts that expire April 30th. This is a starter position for me. I'm putting $5,000 of my money into the bet, and I can scale it if the S&P 500 continues to rip to the upside. And if it continues to rip to the upside, to be honest, it's going to give me even more conviction that we're going to get a market pullback. So thanks for tuning in, guys. Once again, if you enjoyed this video, if you find that there was a lot of value in it, go ahead and like it and please subscribe. Write any questions and any comments. I'd love to hear from you guys. Let's get this conversation going. And if you're in the same trade that I am, hey, let's stay in touch and let's see how this trade works out for us. So thanks again, guys, for tuning in. Have a great weekend. We'll see you next week.